Everybody in. All right. Welcome everybody to the investor webinar for San Sebastian Place in Augusta, Georgia. We'll wait another couple of minutes for any people straggling on, but thank you so much for being here. We're super excited about this property, and we're super excited about Augusta in general. So we'll go through the many reasons why we really like this market. Once again, thank you for being here, and we'll get started here in a minute or two. You have to excuse the hat and the scruff. I've been bedridden for the last 2 days with strep throat, so you'll have to excuse any of the scratchiness in my throat you hear. I'm going to power through it. All right. Well, we'll be recording this webinar for everybody who doesn't make it. So I think we can go ahead and get started. All right. So to get started, we wanted to talk a little bit about apartment investing in general. And in case anybody on the call or anybody watching this recording later don't know what syndications are when it comes to buying apartments, that's how apartment buying is done for the most part. We come together in order to buy apartments together. And typically there's a managing partnership, which is known as the general partnership. And in fact, for this deal specifically, the general partners are investing over 100K of their own money as well, which speaks to volumes to the property itself and the deal itself. And in fact, our KPs are 3 people that you may know really well who have also thought about how great this deal was and decided to put up their balance sheet. So we're really appreciative for that. For all the people who are investing the money into the deal as well, those are known as the limited partners. And together, the limited partners and the managing partners combine their forces to buy something that we wouldn't be able to buy on our own. And then the managing partners execute the business plan and then make sure the returns are distributed to the limited partners. So one thing to note here at the beginning is that we are trying to get this deal done before the new year. And so tonight is the investor webinar where we're going to go over the market and the underwriting. Tomorrow we'll be open to funding. We'll send out our online investor portal to anybody who hasn't signed up yet tomorrow. And then we'll have all the legal documents for you to review and DocuSign by the end of November. And then by December 3rd, we want to have all the funds wired. The sooner the better. We should be able to close by middle to end of December. And the sooner we get all the funds in, the sooner we can close. So that's where we're at right now with the timeline. We'll review this again towards the end. All right. Now, for everybody who hasn't been a part of an investment into an apartment syndication, we want you to take a little bit something from this presentation as well. So we want to walk you through 3 important elements of any investment opportunity that you're going to look at if you start going down this route. And we think you should, because it's really awesome. First, you need to know your sponsor. You have to trust the person you're giving money to. That makes perfect sense, right? And we'll go through all of us who are on the deal, and that way you get to know us a little bit better. You also need to know the market. You don't want to buy a really nice place in an area where everybody is leaving because there's no jobs. You won't have anybody to rent the property. That's what makes apartment investing so powerful, is that people need a place to live and then they pay rent to live there. Then we as syndicators are given the opportunity to provide them an even better place to live by coming in infusing some capital and making it a better apartment complex than what we found. The third part is you need to know the deal and the underwriting and what you can expect from our projections and the timelines and when to expect it. And that way you can make a decision on whether or not you'd like to invest in the deal. All right, so who is H Squared Capital? So we have my partner here, Hutch. He's been a Marine for the past 23 years and still serving strong and proudly. He's doing some cool stuff right now. I get pictures all the time of all the cool things he's doing. But he has done so well in his career that now he's leading several hundred Marines to perform their jobs and training and combat operations. On the real estate side, he's executed over $2.4 million in single family real estate. He's co-sponsored a syndication of a 55 unit in South Carolina. And we have some more stuff that we've done since then. So I'll let Hutch take it away.
Yeah, absolutely. Appreciate everyone for joining us tonight. Heath, I really want to appreciate you for actually taking time out to join us, man. And we know you're not feeling well all day, but you're committed to this, right? So we appreciate you, brother. So I met Heath back in 2019 at a real estate conference. We started out being an accountability partner. That was important to us, right, to get to know each other. And since then we have grown to become friends. But what does Heath do on his day job, right? He's developed and managed several NIH and DoD funded research. So the man is real smart. He's a research scientist that works for the Army, and so this beautiful presentation that you see here is his handiwork. So he's a research scientist for the Army. He have worked with project over $3.5 million in budget dollars. He has successfully acquired several multi-family properties for his personal portfolio, right? And how does he do that? He do that through his commitment to doing the proper research, analyzing, and actually just having that stick-to-itiveness to finish something that he started. A little known fact: Heath is now a full-blown Iron Man, right? Because the dude just get up and run, and he never stopped. Maybe just stubborn, but it's currently self-managing over $1.1 million of rental property, which he's working to transition into getting that a third party property management, so he can free up some more time so we can find some more deals for you to invest in, right? But overall, an amazing guy, and I'm blessed to have him as a partner. So in 2020, in the heat of the pandemic, we were fortunate at H Square Capital, after we became accountability partner, we decided to join form H Squared, and create a lot of relationship that brought us this opportunity of a 167 units apartment complex in Augusta, Georgia. So needless to say, we are familiar with the area, right? We see the growth in the area. We got property management set up in the area as well, who understands the market. All right, so Wanda and Aziza or we're joining partnership with them to acquire this deal. And together Aziza and Wanda form Green High Ventures. Wanda is a Navy veterans, graduated from college with a business administrative degree. Now she's no stranger to real estate. She's been a real estate agent in Florida since 2019, and has successfully executed over 4 million, almost $5 million in real estate transaction. Now, one of the things that I like about our mission is that she's committed to the veterans. Aziza, who is a co-partner with Wanda on Green High Venture. She's a graduate from the Huntington University with a degree, a bachelor's in nursing. She is well familiar and versed in real estate investing, and have been investing since 2015 in small multifamily properties. Additionally, while acquiring these properties, she's developed some experience, a lot of experience in managing these properties both locally and also remotely, to include managing a capital expenditure into the property to get them to the highest and best use.
just got to say, anybody who has property management experience is key to a team because there's a lot of stories you get from managing your own properties. All right. All right. So our mission at H Squared, we come together, and the first thing that Hutch and I realized once we formed H Squared, or even before, whenever we were driving up to Huntsville twice a month to look at properties, is we thought you have the power of real estate, and it can change your life considerably because now you're building independent income streams with each investment into another property. And the power of this not only helps you with your family, but you can then help other people. And I think that's what makes the multifamily community such a unique niche in the business realm. And so we decided, well, if we're going to be doing this, why can't we also help bring retired service members together with high net worth individuals and then buy apartments together, and then everybody can make money and everybody can use that money for their family and for the charities and the things that they care about. And so we are committed to helping the people who have served our country get their time back, because not only once you have other money coming in, you don't have to go get the W-2 job after you retire. I think Hutch can speak more about this.
Absolutely. As an active duty Marine for the past 23 years, what a lot of my friends have done, which is, to each their own, right? Is they get out and they leverage their 20 plus years of experience, and they make a lot of money in corporate America, right? So what we're aspiring to do is provide them with the opportunity or a pathway to shrink the amount of time that they commit to working in corporate America, beyond retirement, so they can get some more of the time back after they retire from the military.
Absolutely. And in addition, 10% of our acquisition fees go to a nonprofit supporting veterans as well. So something that's very near and dear to both Hutch and I and our Green Venture partners as well. All right. So now that you know who we are and what we're about, we're going to get into where we're buying. So if you're like us, you really want to feel excited about the market you're buying in. And the reason this is because if you are sitting there and you've heard stories about Vinny Chopra buying a $12 million apartment in Atlanta and then 12 or 13 months later selling it for 19.5 for like a $7.5 million, and he didn't do anything. He just kept the ship, from sinking. You might be thinking to yourself, why didn't I buy property in Atlanta 7 years ago? All right. And so if we have that thought and then we reverse engineer what that actually means, we can get the fastest path to success. And what that is you need to find out what the markets are that are going to blow up before everybody else does. Right. And so now you may be asking yourself, well, what's the big deal about Augusta, Georgia anyway? Well, we're here to tell you, like Marvin Gaye, what's going on with Augusta, Georgia. All right. So this place is beautiful. I've been there visiting whenever we were doing our due diligence on our other property, stayed there for a couple of days. This area is super beautiful and it's vibing. There's a vibration there that's just unparamount here in the Southeast. So yeah, excited about this market. I think Hutch can tell us more about why.
Yeah, so second only to Atlanta, Georgia. It is the second largest city in Georgia, right? Seeing about 200,000 in population. Now it's actually like 199,600 and change, right? But in the region, there's a little bit over 500,000 people that call the place home. It's nicknamed the Garden City. Now, it was named after Princess Augusta of Wales, right? Little known facts. Now, one of the things we are tracking, and since we started in 2019, is we see that a millennial are driving a lot of things, a lot of apartment growth, right? Because a lot of them are preferring to rent than to purchase. Yeah, a lot of them. So we see that the median age in Augusta, Georgia is 33.4, approximately 34, 33 years of age. Additionally, what the millennial are looking for when they move to certain location, not only they want to live, work, and play in the same environment, but they also looking for experience. And you see this in the growth in Airbnb, right? No longer is this cookie cutter Airbnb valid, right? They looking for an experience in a immersion into a culture, and Augusta provide a cultural experience for these millennials. Additionally, the cost of living is conducive to their growth, right? A lot of these young millennial graduating college, starting their life, and they want to be able to afford it. So, with the jobs availability in Augusta, Georgia, they're able to do that because of the living expenses. The median home cost is, according to Realtor.com, is 174,900, which according to realtor.com, this talk about the listing price, the actual sale price of median home price of homes in Augusta is actually $180,000. So what that means is that there's a demand for housing in that area, and people are willing to pay more. So it's a small city, and there's a lot of job availability there. And what's cool about it is that there's the commute to go get into this job areas are not very timely. So approximately 18.3. As we show the diagram of where the property is located in proximity to the job areas in Augusta, you'll see that it's on a direct path to the airport and also to Fort Garden, and very close proximity to the job availabilities. All right. So if you play golf, I think golf is one of those sports that is associated with the affluence in society, right? So Augusta is the home of the Masters. I'm pretty sure we all are familiar with that. Um, Having a master there every year, it helps keep the economy in a steady and stable path. Fortunately for Augusta, the government there is government and businesses there are so committed to bringing attracting people, tourists, and also growing the population to that location. That in 2020 they had a masters, and also in 2021 April they had another masters to attract people to the population to that city. Right. So there are two big things that you should always look for when buying real estate. We're looking for a great location, which Augusta, Georgia is perfect phase for business, right? It's right sides, ideally strategically located with a backbone of education, medical, military, which push a lot of solid labor into the workforce in Augusta, Georgia. And additionally, you're looking for population growth. Now, why is population growth important? See, when you have a supply, when you have a demand that is greater than your supply, then of course this is how we can get we can increase our rent as well, and also increase the occupancy in our properties. Buy where people are going.
Buy where people are going, man.
Heath?
All right. So the Augusta area has been growing steadily over the past decade, close to decade. Um, let's see. And there we go. Of all of the people that are in the workforce, the majority of them are manufacturing, cyber, technology, and healthcare, which is a four-pronged stool of stability for the people who will be paying rent to be living in this area. It's an incredible places. You want when you're looking for places, you want to make sure there's not just one industry that is the sole provider of jobs in an area. Because if that one industry goes down, jobs move, then all of a sudden that market, that area goes down. But here there's four pillars that are contributing to the workforce So if one of them was to go, you still have three others supporting the jobs there. Oops. Right. So Augusta University, Fort Gordon, there's this Fana Riverside, and then this plant Vogel are where most of the jobs are at. All right. So there's a predicted 6% increase in population over the next 3 years as well. And this is specifically due to the Cyber Command coming to Fort Gordon. In fact, they're having trouble with all of the growth that they've commissioned they've commissioned people to figure out how to handle all this growth, and they're opening different gates so that they can accommodate the number of people that are coming here. And if you go downtown, if you're ever in Augusta, it's beautiful downtown. You can see how vibrant it's becoming, and the renovations that are happening around the city center. And so we always say you want to buy where people are going, and you buy where jobs are growing. The Augusta University just added $2.7 billion and over 21,000 jobs to the Augusta region. In addition, the bestplace.net said that the Augusta has a future job growth of over the next 10 years of 38.5%. That is incredibly high. And so it's no, this won't be a secret for long. There's no reason to believe that this isn't going to change. And there's no reason to think we shouldn't be getting in on the front end of all this growth with our investments in this area. In addition, there's 80 companies bringing another 9,000 jobs. As we mentioned, the Georgia Cyber Center is going to be there as well. That's right here. There's about 5,000 people coming in to fill up the roles here at the Cyber Center. And there's actually a concern in the Economic Development Authority that they're not going to have enough housing for everybody who's coming. In addition, Fort Gordon has a cyber command center that's going to bring in $2.4 billion to the region as well. These are all good signs. So we just can't stress enough. For anywhere you want to invest, you want to buy where people are going and where jobs are growing. All right. I'll pass this over to Wanda.
Ziza.
Oh, Aziz is going to do this one. That's right.
Thank you, everyone, for joining us. San Sebastian Place is located on Tobacco Road. Tobacco Road is a very, very busy road that over 20,000 cars pass through it throughout the day. And also, there are so many business surrounded to this apartment. And as you see, there are Walgreens, Waffle House, Walmart, and then several gas stations. And this area is very, very, very surrounded by different kind of businesses. Also, this property is very close to Fort Gordon. It's about 2.3 miles away from this property. And the Army Cyber Center is about 6 miles. And then the Augusta Regional Airport is about 6.5 miles away from this property. The property is in the middle of between the airport and all. Also, there is a properties, there's a subdivision in that area where houses are selling for over $200,000. So this is a very, growing area. As you guys know, the population is growing very high, and job growth is also the same.
Absolutely. Yeah. Once you start having properties that are selling for over 200K up around your apartments, that just increases the value of the entire area. So that is such a good sign right there. And Tobacco Road is just this straight shot between the airport and Fort Gordon. So super awesome.
There are 7 buildings. They're all 2-bedroom, 1 bath. They're about 775 square foot. This is the floor plan the current floor plan, and then this is the current look of the apartment. So our plan is to update it and then bring it up to the current market rents. Right now, the rent is about 645, but our projected rental, 3 years rental plan is to bring it to 900, which is, it's lower than the current market rent. Our budget, our CapEx budget is $350,000. That is for interior and exterior. This is our current apartment, but after we rehab it, it's gonna look like something similar to this. And our property manager, he has over 30 years experience in managing properties, and he has his own contractor company. So he is the one who's gonna be doing the rehab for us. So this is his work, his previous work from this different apartment, yeah.
Yeah, I just have to say, I did an accidental test in the apartments I have here where I'm at. I always got the brown LVP to make it look like hardwood. And then one week or one of my rehabs, they didn't know what I wanted. So they brought this gray and they put down the gray. And every time I would show tenants, if I had two that were vacant, if they wanted the hardwood or the gray, they always picked the gray, which was crazy to me. So I just started putting gray in all my units. So this is the new wave. This is what all the kids like. Kids these days.
Gray is very hot right now, hence
There
my
you go.
virtual background. Yeah, gray is very hot right now.
Would you call these a silver fox floor?
I like to call it all agreeable gray myself. But,
I love it.
As far as exterior, we're gonna be changing our signs to this, and this sign is gonna be, very lit and everything, like it's gonna be showing for people who going, the traffic who's going through Tobacco Road. So that's one thing. And then of course we're gonna remove the existing fences and replace it with a new one, and just, yeah.
Yeah, and then also with all the traffic seeing these nice signs, that's less we have to pay to advertise, because we're getting free advertisement just from people running up and down Tobacco Road. Yeah. All right, I think this is Wanda's.
Yes.
Hi, everyone. Thank you for joining us on this awesome opportunity in Augusta, Georgia. This was an off-market B-class property negotiated at an amazing price. Our financing is for the purchase price of $1.84 million. The interest rate we have is 3.7 with 80% loan to value. Also 24 months of interest only, and no 12, 18-month lender reserve required on this. We're looking to raise total capital of $700K and the CapEx budget at $350. We're paying per unit, $70K per unit. The property definitely has room to grow in both the equity and the force appreciation. In the area, the comparable sales now are at $89,459, and we're buying it for $70 a door.
Yeah, that's like, we're getting it for like $20K less than what the average unit is in the area.
The market rents, according to Rent Cafe in Augusta, are trending up. They're currently at 1,008. So our year 3 rents on our underwriting is projected at 900. And this is just under what the average was for 2021, which is good. Very good.
Yeah, because even if we get to 900, there could be the potential to push them higher after year 3. But staying conservative, this is where we'd want to be at, which is still, you keep it a little bit under the market, and then people are going to see on the websites, oh, this place or this place, they look the same. Ours are just a little bit under the market. Boom, the vacancies would stay low. It's always be occupied. So it's nice.
Definitely.
All right, am I up for this one? I think I'm up. So real quick, just here's the details of the investment offering. Minimum investment 50,000, max 250. Projected investment period is 5 years, but we are opportunists. If we get to the point to where we can hit our exit, a little early and give you the returns or more, we may sell a little early, but in general, we are projecting everything over a 5-year term. The loan we have is actually a 7-year term loan with no prepayment penalty, which allows us a lot of flexibility. So if at the 5-year mark, the market's not, great for us, we can basically ride an extra 2 years out. And one extra really nice thing about the loan is once we hit the full term mark, the 7-year mark, we don't have to pay the whole loan back. They're just going to reset the interest rate and we can keep on going. So, bottom line on there is we have a lot of flexibility on the loan term, which allows us to, basically time the exit, properly and be able to exit at the right spot. Now, Heath, I'm going to ask you to stop sharing your screen so I can share. Oh, wait, investment timeline first. Sorry about that. One slide ahead of myself. There's the investment timeline. Heath brought it up before. Today we're doing the webinar. Tomorrow, open to funding, and this is going to go fast. So we've got a lot of soft commits already, a lot of interest already. So it will go fast. So definitely get your soft commit in as soon as possible. Now, as far as the lender has told us that they will be ready to close as early as December 1st. So like, I think it was Heath that mentioned it up front. Like he said, once we're into December, as soon as all the funds are wired, we will close. And the big benefit to a lot of people is we are going to do a cost segregation study. And as long as we close during this calendar year, we are going to share the depreciation, based on everybody's ownership position. So we're expecting, somewhere between, a conservative estimate, 40 to 50% of your investment will come back to you on your K1 as a, passive loss, a paper loss, which for most people is extremely advantageous when it comes to taxes. So we have until the 29th on the contract to close. And just because of holidays and everything else, would like to have it wrapped up very early. And now I think we're okay. Let's see. Let me share. All right, here we go. So what I'd like to do for a couple of minutes, if you'll indulge me, is just go over, some of the underwriting considerations, and as they mentioned, me and my partners are coming in as key principals on this. We're loan guarantors. And a couple of things that we look out on all of our deals is it underwritten conservatively? We don't want to, we want to have a lot of leftover room for growth, in case the market doesn't cooperate with us, and we fully expect the market to do well in the next couple of years. But our underwriting is more of a doom and gloom scenario. So, if you look at this top line right here, I'm going to, in case some of you guys have smaller screens, I'll zoom in really, really big. But this top line right here is what our projected rents are. Right now, the average rent across the property is about $650. There's a couple of units that are rented above that $645 mark. And what was shown on an earlier slide is literally the sign in front of the property says rents are $645. You know, I did a little bit of Google Earth checking and went back through their history. That sign with the $645 rent has been up since 2018. So they haven't raised rents in 3 years, whereas the market rents have gone up significantly since. You know, the average market rent is about $1,000. This is technically a B-class property in a B-class area. However, it doesn't have a lot of amenities that, you know, a lot of the other apartments do. So it's not going to be high end of the rents ever. But since it's a B class in a B class area, it's not ever going to be on the low end of the rents either. So this is a property that's truly going to be, you know, average, you know, in all respects. So year one, we're expecting to bring rents up to $725, which is not a big bump. Year two, $825, year three, $900. And I'll reiterate, you know, our property manager and us looking at all the comps, we can probably hit 900 somewhere, you know, towards the end of year one. All right. But we are projecting it out to year three. And that's just a little bit extra conservative underwriting that we have in there. As far as other income, you know, we like most people are doing, you know, we're going to go in and we're going to bill utilities back. You know, something else that was on the sign in front of the property is all utilities included, you know, and so for the last, you know, several years, you know, 645 has got them, you know, rent plus utilities plus cable all inclusive. You know, what we're going to do is we're going to follow the trend that, you know, has been going on in Augusta for several years. You know, we're not the first to do this. You know, we're towards the later end on this one, but we're going to start billing utilities back to the tenants. And year one, we have 80,000, you know, in extra income that we're looking at bringing in from billing back utilities. Now, our total utility bill is a lot more than that. The average person is going to be, you know, paying about $60 per month when we finish the full utility bill back. So we're expecting to get somewhere around 18,000 once, you know, all of this is said and done. Incidentally, I think 90% of the current occupants are on month-to-month rents, which means we can make a lot of these changes immediately. We don't have to wait till the leases expire to be able to make changes to the rents or to the utility bill back. So that's another spot where we're very conservative. Something else that it is not even baked into the numbers we have in our capital expense budget. Every single unit has washer and dryer hookups. We have money built into our capital expense budget to buy washers and dryers, which, you know, once installed can generate an extra $60 per month in additional income that is nowhere in our underwriting. It'll just be, you know, extra. Looking down the expenses, you know, these expenses are very much in line with market average. We took the owner's current expenses. You know, we took out their $80,000 a year, you know, property management fee that they were paying to themselves. But everything else out here is in line with what the current market is averaging. And we do have 167 units that are a couple miles away from here. So we were able to look at our own property's performance and see where these things would be. A couple other places where we have some very conservative underwriting, you know, is the real estate taxes, you know. So Augusta is not one of the cities that updates their taxes every time something sells, or Georgia's not a state. We expect our tax bill to be around $16,000. But what they did tell us on the phone when we called them is, you know, periodically they will update things. You know, sometimes they select properties for assessments. So we've added an extra $8,000 to our property tax line in case they have extra assessments on here. All right. And something else I'd like to point out is this line right here, you know, $65,800. That's our annual interest that we are going to owe to the bank. When we did our underwriting, you know, the bank, since we pushed out the pitch deck and everything else, the bank told us they're going to give us 80% interest, or excuse me, 80% loan to value at 3.7% interest. The numbers that are on the pitch deck, the numbers, you know, that are on, you know, the screen that you guys have seen are all based off of a 75% loan to value with a 4% interest rate. So essentially what that means is our debt service is actually going to go down, and we are going to get about $100,000 more from the bank than we have underwritten in here. And what that does is that just amplifies everybody's returns, so instead of 700,000, like we said, we have to wait for final approval from the bank, but their underwriters are telling us that there's no reason we can't get that 80% loan to cost. But we underwrote at 75 and 4% interest. And anything above 75, anything below 4% on the interest rate is just going to be gravy as far as the returns go. But we expect our debt service to actually go down, even though we're adding $100,000 to the total loan amount because it's at a lower rate. But and that said, the other thing that I'll point you towards is our exit strategy, and I'm going to have to make this bigger as well. And I'll highlight it so everybody can see it. But here is our exit sales price. I wish this was on, everything was on the same page. We think that in 5 years we can go from a 1.8 million purchase price to a 2.9 million sales price. Incidentally, that is just over $100,000 a unit. And keep in mind a couple of things. Right now the market average is about 90,000 for properties just like this. All right, we ran our own comps. We've been looking at this area for acquisitions for a long time. We think that we're getting this at a very good price, and getting to this point to where we're selling it at about $110,000 per unit. Talking to some guys that we talk to a lot who are also in the Augusta area. They purchased a property about 2 miles away from this a couple of years ago. They renovated it, and they currently have it listed on the market for about $105,000 a door. All right, that is today. And we think we can get this property to $110,000 a door in 5 years. So we think we're fairly conservative with the sales price. As long as the market doesn't come to a screeching halt and go down, we should be able to hit the sales price. So anyway, that's the things that we look at when we're trying to determine whether something's a good deal or not. How conservative is the underwriting on the things that we can't control. We can't control market rents. We can't control what the sale price is going to be. We can't control where interest rates are going to go. We can't control inflation. But with the things that we can't control, that's where we like to put a little extra fluff in the numbers so that we're extra conservative. And we've definitely done that on this property.
All right. Well, we do have a question. How many units per year do you expect to renovate to meet the target rents? How many will be renovated by year 5? The plan is to have them all renovated within the first 3 years or less. Now, how many will be renovated? Typically, the way we go about it is as soon as there's a vacant unit, that then becomes one that will get rehabbed. And then it is offered to anybody who is currently in a lease there. And if no one wants to take it, then it gets leased out to someone new. So as far as how many we would expect to do in year 1 or 2, what do you think, Brian?
It's going to be, in this case, it's going to be based on vacancy. We want to keep the cash flows high. We want to keep occupancy high while we're doing it. So just looking over the numbers, we're expecting that, March, April, May are going to be the busiest months. On average, units in Augusta churn every 19 months, so the average tenant stays 19 months. So I'm expecting, year 1, we're probably going to have somewhere between 30 and 40%, that have churned and that we've been able to renovate and move back and move new tenants in. We are going to start raising rents though to the current tenants, which may prompt some people to move. So if current rents are $645 and utilities are included, and we bring things up to market, that could actually very much help our renovation cause, because there will be a handful of people who look at the new rent and move back with mom and dad. They're not going to be able to find another apartment for the same price. So really their only choice at that point is to move back in with mom and dad. Good to see you, Glenn, by the way.
Yeah, the mom and dad would be paying for the apartment.
Right, yeah. Should definitely underwrite mom and dad too.
Yeah.
Those millennials.
All right. And we can also open the floor to any other questions that anybody else has.
No questions. That means we did a great presentation.
I know, right?
Yeah.
Yeah.
Excellent. Well, hearing nothing, then we'll go ahead and wrap up this webinar. We will be sure to send out a copy to everybody so you can watch it at your leisure. Fast forward to the parts that you want to get the information from, parts that you laugh the most at, and then we'll go from there. If there's any questions, please do not hesitate to reach out to Hutch or myself, or anybody on the team. We are super excited about this property. It's right on Tobacco Road. It's in Augusta. Like I can't get over how much I
It's in
like
Augusta.
I mean, it does. That's all there is. Like I can't believe some of our colleagues have just done some amazing things in short amount of time in Augusta. And so we don't anticipate having any difficulties doing something similar.
Yeah, and just a note, from the Four Oaks team, 3 of the 4 coming in on the deal as KPs. And the one that isn't, just to put everybody at ease, the one that isn't has nothing to do with this deal. It has to do with philosophy of the risk involvement. But one of the partners was in Augusta last week, drove by the property, and FaceTimed me for a good half hour while he's on the property. His overall assessment was it looks sharp, and I told him that we had a couple, little bit of money budgeted on exteriors, and he walked around the property and he said, I don't see where you're going to put any money into the exteriors. It looks that good. So it's a very well-maintained property, so really, we're going to put that sign out in front that's going to attract a lot more attention. And one thing we didn't explain, we got a lot of veterans here. The property management company that we're working with has a deal with the base housing, where if base housing is full, that they refer them straight out to this property management company. So BAH for an E1 without dependents in Augusta is $1,244. Just throwing that out there, and we're trying to get rents up to $900, so for those who are not military affiliated, BAH is the housing allowance the military gives people to live. And if it's $1,244 for the lowest ranking, military member, that pretty much means that the housing rates in the area are a lot higher than we're trying to get to. So.
Absolutely. All right. Well, I guess we'll conclude this webinar. Thank you all for coming tonight and spending your time with us as we walked you through the deal and who we are and the market we'll be buying in. And as I said before, if you have any questions, reach out. Expect some more emails from us, and hope you all have a good night.